Hello everyone, and thanks for checking out our channel, where it's our goal to create a community of informed traders and investors by sharing technical analysis and collaborating together to ace the charts. We look forward to working with you, so let's get started. Looking at SPY on the weekly time frame, and the bears are in full control, setting a lower high and a lower low, even though the bulls have had this really strong rally closing above the 12-period exponential moving average this week. Our last lower high was up here at 280.40 and our lower low was at 233.76. Anything below 280.40 is just a lower high on the weekly time frame. You can see that we have a couple of exponential moving averages to watch out for as resistance. The blue line here is the 55 EMA and the red is the 26. Above that, we also have the middle Bollinger Band, and in this area is the 0.786 Fibonacci level as well. That's based off drawing it from our last lower high to our lower low. We know we're going to get a pullback at some point, but we haven't seen many signs of it yet, as the bulls have been strong during the financial earnings this week. One thing we have been taking note of, though, is the decreasing volume on this bounce. So keep that in mind, and also that we've had a bearish cross of the 12 and 26 EMAs. It is my opinion that we are not very likely to bounce straight from the bottom to a higher high. More likely than not, I think we set a lower high somewhere compared to 28.40, pull back and set a higher low, and then break to a higher high to change the weekly trend. Another scenario would be that we potentially set a lower high, a higher low, and then get into a tightening equilibrium pattern until the pattern breaks in one direction or the other. Keep in mind that there is still a possibility that we could break to lower lows. However, the higher the bounce from the bulls, the less likely that is to happen, in my opinion. We have several more companies reporting earnings this week, including IBM and Intel, so we'll be watching XLK to see its effect on SPY throughout the week. Let's take a look now at the daily time frame. On the daily time frame, you can see that our last lower high of support was at 256.41, and we are looking at a couple of resistance levels up here, which were lower highs at 269 and 271.22. So that's the range we'll be watching. You can see that we've had a bullish cross of the 12 and 26 period exponential moving averages as well. The bulls will want to maintain those as support on the daily time frame. On the weekly time frame, we were watching decreasing volume, but notice here on the daily, the last couple of days of the week, on Thursday and Friday, we actually had increasing volume. The RSI on the daily chart looks like it's at about 61, so still has some room to go before approaching 70 and overbought conditions. Now let's take a look at the hourly chart. On the hourly chart, you can see that our last higher low level of support is at 265.57. Resistance level that we drew on the daily chart is right above that at 269. Down here, the RSI level you can see is at overbought conditions, and if I zoom out, you can see the last time we were that overbought was back on December the 18th. However, as long as the bulls maintain the higher lows and higher highs, they will stay in control of the hourly chart. Let's take a look at XLF now, or the financial sector. XLF on the daily chart was extremely bullish this week as financial companies reported earnings. We have a bullish cross of the 12 and 26 period exponential moving averages. Our last higher low level of support is 24.20, and up here resistance levels I'm watching is right here at $27 and then at 27.47. Let's zoom in now to the hourly. XLF on the hourly chart, our last higher low level of support is 25.88, and our resistance is the high of Friday at 26.02. Let's take a look now at XLK, or the technology sector. XLK on the daily chart, our last high or low level of support is 62.73. Resistance level we're watching is up here at 67.12. Notice that we almost have a bullish cross of the 12 and 26 period EMAs. The bulls will want to maintain those EMAs as support. Let's see if the technology sector can pick up where the financial sector left off this week with earnings. Now let's take a look at the hourly chart. On the hourly chart, our last high or low level of support is 65.07, and our resistance was the high of the day at Friday, 65.48. So we're trading within that range when we closed. Notice that the bulls are maintaining the 12 and 26 period exponential moving averages as support. They'll want to continue that as well. Let's take a look now at QQQ, or the NASDAQ 100. QQQ on the daily chart, similar setup, a bullish cross of the 12 and 26 EMAs. Our last high or low level of support is 158.59. Resistance level we're watching is 167.60. Let's take a look now at the hourly chart. Here you can see our last high or low level of support is at 164.62, and our high of the day on Friday was up here at 166.02. We closed within that range, so we'll be watching that. And here you can see we're also maintaining the 12 period EMA as support. Let's take a look now at IWM, or the Russell 2000. IWM on the daily chart, our last high or low level of support is 142.09, and our resistance level is over here at 148.26. So we'll be watching that range as we move into next week. Notice that we also have a bullish cross of the 12 and 26 period EMAs on the daily chart for IWM. Let's take a look at the hourly chart now. On the hourly, our last high or low level of support is here at 146.91, and our resistance that was the high of the day is 147.92, so we closed within that range. Right above that, we have the resistance level that we drew on the daily chart at 148.26. Here you can also see that the bulls are maintaining the 12 period EMA as support. Let's take a look now at the VIX, or the volatility index. We've been watching for some time now the VIX on the hourly chart, looking for a change in trend. This past week we actually had an equilibrium pattern that broke bullish, but it was quickly rejected by the bears. We now have a lower low at 17.17 and our next lower high at 18.18. In order to change the trend on the hourly chart, the bulls will need to set a higher low and then break to a higher high and maintain the higher low pattern on the hourly chart. If we get a change in trend on the hourly chart, that would mean that volatility is increasing and we would look to SPY to possibly pull back some. Let's take a look now at US oil. US oil, we've been watching this bounce play out now, and you can see that we are approaching the resistance level of a lower high here at 54.54. We closed the week slightly above the 12 period EMA, and we are also approaching the 0.382 fib level. If you follow us on Twitter, you've probably seen some of the tweets about the correlation between oil and SPY and finding a bottom here on this bounce. And if you would like to subscribe to our Twitter account, click the link in the description of this video, and we sometimes send out additional information that's not in the videos. Let's take a look now at oil on the daily chart. Oil on the daily chart, our last high or low level of support is here at 50.41. Last week we pointed out the potential for a inverse head and shoulders pattern. We have the psychology of that here. But we need to break through the resistance of 54.20 and 54.54 to get some follow through. Notice we also have a bullish cross of the 12 and 26 period EMAs. Let's take a look at the hourly chart now. On the hourly chart, the last high or low level of support is 53.40, and then our resistance levels Currently, it looks like we have a double top there at 53.89, and we are currently within that range. So we'll watch that and see if the bulls can continue to follow through. Now let's take a look at natural gas. Natural gas on the weekly time frame, you can see that we set a lower high at 4,648, then dumped to a lower low at 2,906. We then bounced, and we are currently meeting the resistance here of the middle Bollinger Band. We also have the 12 and 26 period EMAs as resistance in this range, and above that the 0.382 fib level. Notice that there is a long upper wick of profit taking here on this candle. Let's take a look at the daily chart now for more details. On the daily chart, you can see we had an equilibrium pattern here that tightened up and broke bullish. We then consolidated and set a higher low, a lower high, and then fell to a lower low. In order for the bulls to change the daily chart back to an uptrend, they will first need to change the hourly chart. So let's zoom into the hourly chart now and take a look at that. On the hourly chart, you can see that we were falling to lower lows and lower highs. We then had a bull break on nice volume, and we now have a higher low level of support here at 3,403. We are currently up above the 12 and 26 period EMAs, and our resistance level is here at 3,512. The bulls will need to maintain this higher low level of support and then break to a higher high to change the trend on the hourly chart to an uptrend. They will then need to change the 4-hour chart. As you can see on the 4-hour chart here, the bears are in control as they are making lower lows and lower highs. So the bulls have got a lot of work to do, and we'll be watching. Thanks everyone for checking out our channel. If you find these videos helpful, please click the like button and subscribe. Our goal is to reach 1,000 subscribers so we can continue to create more free content. Also, if you are interested in helping us build a community to collaborate together, click the link in the description of this video to sign up. It's free to join, so do it today, and let's work together to ace the charts.